Hello traders, welcome back to the channel. In today's video, we're diving deep into one of my favorite smart money concepts, the ICT Turtle Soup setup. I'm going to walk you through a real chart example, break down each phase, and explain why this setup continues to deliver consistent results when executed correctly. Here's our chart. What we're looking at is a clear narrative unfolding. Notice how early on we had a clear uptrend on the 15-minute time frame, leaving behind inducement, fair value gaps, and order blocks. The second break of structure confirmed bullish intent, and we immediately had liquidity targets above marked as buy-side liquidity. Price then started taking a move to the downside. But here's where it gets interesting. When price started retracing and began creating lower highs, it slowly began building a bearish narrative. This is what sets the stage for the turtle soup. As we go further into the chart, price enters into the inducement zone, setting up for a classic liquidity raid. Now watch this. We get a liquidity sweep of the previous low. This is where retail traders would normally look to short the market, expecting a breakout to the downside. But what really happens? We get a false break, and this is exactly what ICT refers to as turtle soup. This pattern traps breakout traders on the wrong side of the market. But if you understand smart money concepts, you'll know this is a perfect opportunity to position yourself with the institutional narrative, not against it. Here's where things line up perfectly. We've got a sweep of sell-side liquidity, SMT divergence with the euro, price tapping into a refined order block, and a shift in market structure afterward. All of these confirm that the move down was engineered to generate liquidity, not a true continuation. That's your signal that a reversal is coming. This is not just about one candle or one indicator. It's about the story the market is telling you. So where's our entry? After the liquidity sweep, we wait for price to return back into the range responsible for the sweep. We want to see a clear bullish candle with momentum before we get involved. Stop loss goes just below the low of the turtle soup wick, and we target the next liquidity pool, which in this case is the previous swing high. Risk reward on this setup? Easily a 1-3 or more, clean, logical, and repeatable. This is why the turtle soup setup remains one of the most powerful tools in the ICT playbook. It leverages retail behavior, institutional manipulation, and the smart money narrative all in one move. Make sure you're not just copying signals, but understanding why these setups work. If you found this breakdown valuable, don't forget to like, subscribe, and drop a comment below if you want to see more ICT breakdowns like this. I'll catch you in the next one. Stay sharp, trade smart.